We are closing out the week, the month, the quarter, and the markets are hot today on the back of some strong headline PCE data, but the underlying data, not so great. We'll get into all of that and more. We're going to give our winners and losers for the first half of 2023. Before we get going, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. We are not financial advisors. We are just a couple of guys who love following the markets, trying to figure out what in God's name is going on. So please do your own research before making any buys or sells. Kev, we had data come out this morning. PCE, the Fed's preferred inflation data point, came in at month over month 0.1%. If you exclude food and energy, which is what they tend to look at more, came in at 0.3%. On the year, the PCE is now 3.8%, down from 5.4, but the core PCE is at 4.6, and it has been either 4.7 or 4.6 through the first 5 months of the year. Today was May's data reading. So while the headline number looks good, people see this, it went down by 0.6%. It is under 4 for the first time in years. This is great. Take us to the moon. Not so fast, because that core number isn't really budging. And the same can be said about the probability for a Fed rate hike in July. It still sits at an 87% chance. Very, very strong likelihood, almost guaranteed we see a rate hike in the July meeting. If we look at the September number as well, we're looking at they're having it at 70% that they pause, or that they skip an increase in September, and only 19% that they go up again. I don't know if I agree with that. So, we'll have to see how it plays out. But as we move into this last day, the weekly, monthly close, what are you thinking?
Man, I don't even know what to think anymore. This data in this market and what everyone's doing, it's a clusterfuck. We can at least say that, right? Core PC has literally been sideways. It's literally been doing this up and down within the smallest range possible. And people are bullish. This could be on just the headline number, and of course that's the headline, so that's the one that's going to be promoted. But again, there's a lot of data that goes into this, and it just doesn't make sense to me too when we look at how hawkish Powell has been, right? He's not said too much recently that's like, that's a good fucking sign. I can relax for Q3, Q4. No, he's pretty much said that they're going to continue raising rates, and they don't see inflation coming down to that 2% level this year or next year. Which for me, that's bearish as could possibly be. But again, we're not living in reality. We're living on Jim Cramer's planet, and we abide by his rules. So right now, going into Q3, this has just been. It's been a ride, right? Obviously, this is euphoria. People are excited. When people are excited, that tends to be when a lot of people who aren't traders get into the market as well. Is that a good thing or a bad thing? I don't know. I just know that it adds liquidity to the market. The pool of cash that it's flowing within these markets continues to grow. Definitely grew for Apple today. But again, I think the most important thing is that the move that we've seen so far is not based on just today. Obviously, today we're seeing a lot of green because it is the end of the quarter. People are closing out positions, or maybe they're opening them up. Who knows exactly what they're trying to do? But it tends to be more institutional based than it is, retail. Retail, if anything, has been buying along with some of these institutional players as the price has been going up. And this also could be a short squeeze. You and I were talking about this before. Like, there's a lot of people shorting tech right now. So I'm not surprised that the price is shooting up. I would love to have seen it go red today, obviously, because we just put in such a huge move to the upside. This correction has been insane. Like, there has been literally very little resistance this entire ride up. And this is on macro. On the daily, maybe we have one or two bad days, but then next thing you know, we're right back. The gains, everything's recouped. So going into this, I think maybe we're getting a little bit of a short squeeze. I think we're seeing a little bit of institutional play at hand. And I don't necessarily feel any different based on how Q2 has closed out. If anything, it's just, pushing me close to the edge, thinking that, okay, this has to break at some point. I'm in a place where I feel comfortable. I've told you, everyone knows exactly how I'm sitting on my position, but I feel safe in that position, even if the price fluctuates a little bit, because again, the data and the charts and a lot of what people are doing, and this is all psychology too, right? You have to account for what other people are doing too. That's the fun part about this market. It's psychology, it's data, and it's news. And you have to kind of balance all three of those out and find what the truth is amongst all three of those. And, I've been balancing that out. You helped me with that. I think we're helping other people do that as well. So yeah, going into Q3, nothing has changed, but this is just an absolute clusterfuck. This has been since the beginning of the year. Max euphoria. I'm pissed. I'll let you take it over. I'm just rambling now.
It is all good, man. We try to like be as unbiased as possible. Like I try to look for some of the bull cases, and so I was doing some reading today. Some very smart people out there. Well, allegedly, kind of talking about there are signs that there is still more room to the upside, even in TradFi, even in the tech sector, because so much money has been sidelined, right? Like, and that was probably a signal heading into the year that there was still, everything was over. Like last year was an absolute bloodbath. If you looked from December of 21 till December of 22, it was just all downhill. And you definitely could have seen that it was oversold and that there needed to be a bounce back. Now, I didn't expect it to be this much this quickly, but a lot of other people didn't either. And a lot of other people who have much more money than I do, obviously, are still in disbelief and are still sitting on the sidelines, like, and questioning themselves. And money managers who have been sitting in cash or sitting in bonds are like, fuck, do I have to jump in now? Like, how pissed are my customers going to be that, we've been sitting here and they've been on the sidelines while all this has gone back up. So
That's
I
a
think
squeeze, though, right?
Yeah,
I
I guess
because people are
like it
worried
is.
that it's going to keep going up, so they have to get
Yeah.
in. So that's going to squeeze shorts.
Yeah, like the FOMO, I think the FOMO is still very real. And if you look at it too, the sentiment is high amongst these main few stocks, right? Like when you really break it down, it's been a handful on the tech side, like we've discussed. Is that driving people to say, like, okay, other things are going to rally, we need to jump back in, we need to put in some positions here? Maybe it does. We saw a little dump in crypto earlier when news came out that the SEC wasn't going to go ahead and let these ETFs go through. However, there seems to be like, well, it's not done. They just need to like kind of change the language around, structure it differently. So crypto has recovered a bit from there. But man, it's a strange time. I think we should get into our winners and losers for the first half of the year. How does that sound to you?
Definitely, yeah. You want to start it off?
I'll start it off. So winners for the first half of the year. I'll start it. I mean, you really have to. It starts here with AI stocks.
Yeah.
Like it has to. I mean, Nvidia's just been on an ungodly run. Now, the news that the Biden administration may shut down their ability to sell AI chips to China is definitely something to keep an eye on. That was a quick oversell. It's bounced, stuff like Nvidia has bounced back since then. But I think you got to put the AI stocks as one of your top winners. I'll give another one, and that is big banks. We've seen all the crisis in the banking sector. We saw that JP Morgan had to take over First Republic. With everything coming up with commercial real estate, there's there's decent chance that some of these other big banks are going to have to absorb smaller ones. That means that they're going to get a lot of assets for cheap and continue to just be the mega banks in this country. What are some of the winners that you have on your side?
Yeah, definitely. I was going to talk about the big banks too, just because these regional banks, we saw what happened to them. They're absolutely selling off. However, we saw JP Morgan, we saw Bank of America. A lot of these, they're steady. They're acquiring assets. So, I mean, it seems like a safe bet. I'm not going to say it is safe, but it's been a safe bet this entire beginning of the year, right? We saw how volatile some of these like PacWest, SIVB, and like everything bounced back after SIVB too, right? Not necessarily smaller regional banks and stuff like that. You're seeing tons of volatility with those, but like for a lot of these assets, and then especially after JP Morgan acquired who did they acquire again? Was it First Republic?
Yeah,
First Republic. Yeah, after they picked up First Republic, like everything was fine, right? So they kind of like stabilized, the sentiments. Fine, but they stabilized the sentiments for for banking. So I definitely see that, that being oversold, and that was a perfect opportunity to jump in. They've rallied since. So yeah, banks were definitely one that's really interesting. I would also say, treasury yields too, even though they're not as great as they were, a few months back. But if you got in at the right time, so say when SIVB happened or something like that, you could have locked in a pretty good rate, and you could have been sitting on a 3-month or something like that, 2-year, and you could be doing pretty well for yourself. Again, that's safe money. It's not necessarily the most fun. It's not the sexiest way to make money. Sexiest way to make money is to dance, but this is just what do you call it? I would just say that that's been a safe bet for people to generate wealth if they didn't want to be in something extremely risk on, right? You're gonna make something. It's just you're tying up your cash. So I've been very conservative with a lot of things that have been going up. I don't buy a lot of this, but I do think that AI, I agree with you, and along with banking, those have been major winners in the space. It hasn't been a lot for NASDAQ and S&P outside of those few tech companies, right?
Yep. You also have to throw Bitcoin into the winners on the year. Bitcoin up. It's up 90% on the year, Kevin. What do you want me to say? Like, do you want me to say that that's not good? Like,
no. I forgot that how much Bitcoin is up. I'm like, man, I fucking son of a bitch, Bitcoin.
Yeah, Bitcoin up 90% on the year. That's pretty wild. Feeling like, will we end the year here? I don't know, man. You got the Moon Boys are back, and they are back with a vengeance. You got some of them calling for Tesla all-time highs this year. I'm sorry. What now? You want to see a 400% increase in 1 year for Tesla during these conditions? Okay, I guess that's maybe a possibility. But you have to put Bitcoin in there.
Yeah.
Does this rally have more, more room to the upside? I don't know. So I'm just going to keep sitting here. I have my Bitcoin position. I'm happy with when I bought Bitcoin, June of last year. So, I'm into long-term capital gains now if I want to take some off the table. But at the same time, I don't feel like having to deal with repositioning again. And so I'm just going to kind of let it sit. And, I think with not only the price making it a winner on the year, but the fact that we are seeing a lot of these big institutions trying to adopt Bitcoin as as an asset. And we're seeing a lot of outside the US as well, a lot of other countries trying to get deeper and deeper into Bitcoin. So I think on the crypto side, the big winners this year are Bitcoin and ETH. And I don't really think there's anything beyond that. So do you have any other winners before we move into the losers for 2023 so far?
Nothing too crazy. Yeah, no, I think most of the stuff in TradFi is honestly just risen with everything. So I guess the S&P, the NASDAQ, and the Dow, right? Everything's been doing pretty well. The Dow maybe not so much. Saw a lot of resistance, but for sure NASDAQ and S&P, those have kicked ass this year. You can't knock it down. Like from those October lows that we saw back in 2022. I mean, we're significantly higher than where we were in October of 2022. So, boring old, wealth. What is it? Wealth preservation. Seems like it's doing a pretty good job with those 8 to 10% returns. Maybe a lot more in some of those areas, some of those other indices. But yeah, that's pretty much it. It's been very boring, but everything's been pretty much up, except for a few that we'll get into right now.
Yeah. So let's talk about the losers on the year. Well, just quickly, we'll throw out the regional banks. This was already discussed previously, but they're a loser on the year. Going hand in hand with that is commercial real estate. I mean, it is absolutely awful right now. The vacancy rates in a lot of these major cities continue to trend up and up and up. Like, good luck renting out a place in San Francisco at this point. Like, it's just a bloodbath over there. And, a lot of people are leaning toward that being a catalyst for a move down. As we've seen, when everyone starts to think the same thing is going to lead to a certain outcome, oftentimes it doesn't go in that direction. So as the attention gets drawn to that, maybe, more money goes in that direction as well. More, backstops put in place to make sure that doesn't cause a crash, hopefully, but, that would rely on people being rational and sane. I'm also going to throw in Jim Cramer as a loser on the year. I mean, if you look at when he was telling you to sell Facebook at $100 a share, oops, that was a bad call. When he was bearish on Tesla, another bad call. When he was telling you to short NVIDIA at $120 a share, another bad call. I mean, the guy has just been taking L's left and right. He said that, the NASDAQ was going to do well here. If you shorted it, that was your funeral. I guess that was his first, good call on the year. But I'm going to throw old Jimmy Cramer in there as being one of the losers so far, at least with his calls. I don't know what he actually does with his money. I don't know if he does what he says. If he could be counter trading, like, that would be a wild move. And pretty much sending him to prison. But yeah, I'm gonna just going off of what he has said. I'm putting him in that camp for 2023 so far.
For sure, Jimbo Kramer, he belongs there. I will say two things that I do like that have been big losers, I think, this year. One of them is the DXY. I'm so bullish on the DXY. You know I am. However, it's not been as profitable or seen as much growth as we've seen prior to, back in 2022. Like go from August to September of 2022, like it was absolutely insane, the DXY. We saw pretty much retracement all the way since September, all the way down until March. And, right now we'll talk about the DXY in a few minutes, but it's not doing much, right? It's kind of consolidating on a range and it's pretty low right now. And every time we get bullish news or data, then that thing just shoots straight down. And again, we saw it today when we got those headline PCE numbers. But the DXY is one, and then the other one that you and I both love, and it pisses us off that it's so low, is the VIX, right? The volatility has not been there, and if you were somehow involved with trading VIX or options or anything like that, then it must not have been fun. It's been just going lower. It's going lower. It's the Titanic on its way down. It's going extremely low. It's the lowest it's been since before the pandemic, right? It's February 2020. So
yeah,
maybe we get something back. Maybe we see some type of rebound going into Q3, but Q1, Q2, absolute shit show, like just underperformer.
Yep. It absolutely is.
Also throwing altcoins too. They have not seen the light of day since 2021. So be that as it may.
Steve, good to see you. Happy that you found our channel, and you're right. I can't even tell you the last time that Jimbo had a successful quarter. So that just kind of seems to be the norm at this point. We'll know that we've truly gone into the upside down when Jim is making the right calls over and over again. Let's look ahead now to the back half of the year, Kev. I know that you're going to continue to be bearish heading into the back half of the year. That comes as no surprise to anyone who has listened to this show before. But if you want to dive into the charts, we can do that. If you want to keep it focused on the macro, we can do that as well. What direction do you want to take it at this point?
Let's do a little bit of both.
Okay.
So obviously we're talking macro. Let's talk macro first, just because I think that's the most important thing to see where things will be going. I don't want to bog anyone down with, the lower time frames and seeing where price could go from today to tomorrow to Tuesday. But if we're looking on the months ahead, this is the DXY, right? We're completely oversold, and we got the 50 moving average currently sitting at about 99 level, and it's on this blue line where we've expected there to be some support if we did hit it. The monthly is creeping up, and again, I think we are likely to see in the short term some price move down. But since we are undervalued and we stayed overbought for a period of time, and if we find support and we stay on this line right around here, this 100.845, which we've already touched twice, I think that we have plenty of room to the upside. Again, we're currently sitting at 5 and 3.57 on the stochastic RSI on the monthly, and if we look on the weekly as well, we're coming down from overbought, right? We shot up too fast, too soon over to the overbought territory based on this weekly stochastic RSI. And I think a lot of this has been just, we've seen a lot of resistance, not necessarily from the charts or price action, but we've seen a lot of resistance from the news. Like we've gotten a lot of inflation readings where it's just come down, right? Or it seems like it's coming down significantly. And that's terrible for the dollar. And it's more bullish for risk assets because people think that there's going to be, quantitative easing. People will be able to, get loans a lot easier and not at such high rates. So seeing this, I think that has pretty much put a damper on the dollar the first half of the year. However, I think that we are going to be seeing this rebound soon because the monthly is so oversold. And then we see the stochastic RSI for the weekly coming back. My opinion, just in the next few weeks, I think that we are going to probably touch down 100.845. I thought this was going to be a double bottom and we are going to start climbing out of here, but I think that there's a chance that this could be a triple bottom. And is that great?
You got to pay extra for that.
Yeah, you triple bottom. It's like a Total Recall, just not on top. So yeah, this is we hit once, twice, and then we're gonna hit it thrice likely. I don't see a world where we don't find at least some support on this down here, this 200 EMA on the weekly, I think that's going to be climbing up. And, maybe in 1 or 2 weeks, we finally lose this blue level here at 102.038. And I mean, we could honestly lose it pretty soon. We already tested it. But if we start closing the week below that, then I think that the 200 is going to be climbing up as it's moving with this move up. The 50 is going to be coming down. And I think that we are going to find some support where the 200 and this 100.845 meets. And that would hopefully give us the triple bottom that we would need to stay bullish on this for at least the weekly time frame. Obviously, triple bottom is bullish. That you should see some type of reversal from there. And we would have to monitor the weekly stochastic RSI with the monthly because, as I said here, we were oversold on the monthly, but this thing, the weekly, it just shot up way too quick for us for the price to be stable. And again, we see this higher highs and higher lows. It's going to lead to a breakdown, right? The main thing we're looking for is support, and I'm hoping that we find that at 100.845, and that leads us into a bullish second half of the year for the dollar. That would have to anticipate that the news gets bad around the world too. We would have to see some type of negative news that allows the dollar to grow and risk assets to necessarily take the back seat to it. What could that be? I'm still keeping my eye on geopolitics. I think that, Russia, the Wagner Group, and Ukraine is, something that's really important that people kind of forgot about. They're not talking about it, considering the Wagner Group is literally like 100 miles north of Kiev right now. And they're also in Belarus, who's been pretty loyal to Russia. I wouldn't be surprised if that causes some type of energy conflict in the Eurozone, raises inflation over there. We've seen inflation in Eurozone has been absolutely abysmal this quarter, right? They keep raising the rates for a lot of the European Central Bank and stuff like that. So if inflation is bad over there, it's going to bleed over to the United States, especially if it comes to oil. So that's one thing I'm going to keep an eye on. And there's
real quick on the, that's definitely something that you got to keep an eye on. At the same time, we can't predict what's going to happen there.
Right.
If we talk about what can damage risk assets that we could potentially see coming, I think it could be earnings later this year. So
thanks.
Early in the year, earnings expectations were kind of on the lower side, so they overexceeded, right? Mm-hmm. Now there is this expectation that earnings are going to improve potentially going into the back half of the year. We saw NVIDIA raise their targets. That was that day where it went up like $75 a share because they were expecting earnings to go up considerably. So I think the fear around the China chip situation could hurt that. The fact that as we move into the year, we know that discretionary spending is going down. So if all of these big tech companies, whether it's Tesla, whoever else, if we're all expecting earnings to come in strong in the back half of the year, meanwhile, discretionary spending is going down, there could absolutely be a catalyst where maybe not Q3 earnings, or maybe not when Q2 earnings come out, but maybe in the last quarter of the year when Q3 earnings begin to come out, that we start to see some problems. And we'll get the Q2 earnings beginning in the middle of July. Like earnings season is a few weeks away. And I think that's one potential catalyst for a lot of these overvalued and super frothy stocks to take a hit is, do we see, if inflation is slowly trickling down, if rates are kind of, going to be eased off a bit, but all of a sudden we see misses on revenue, we see misses on earnings per share, we see these reports coming in for expectation, I think that could be a move to the downside right there.
Oh, completely agree. That's a great, breakdown of that situation too, right? Expectations versus where we're actually seeing money flow in. I mean, that could absolutely destroy risk assets, especially some of these companies that have such high expectations for growth going into this year. I think another thing, obviously, we've talked about El Nino, but that's later on. Maybe that's a while away. But I think regional banks is another thing we still need to keep an eye on. Yeah, maybe they get bought up by Jamie Dimon or some of his friends. Maybe they get consolidated into another regional bank. But we still have to anticipate that rates are going to stay high for a period of time. They're not going to lower them anytime soon. And even if they do pause them for a period of time, rates are still extremely high, right? We're almost at 6%. So that's something that we have to keep an eye on and anticipate that maybe we see some of these smaller banks continue to hurt and bleed out. And again, this also affects consumers and borrowers as much as it does lenders. So that's another thing that we need to be keeping an eye on. We can move from the DXY. I think that we need to look at some of the indices real quick, just go through them and just see how we're stacking up. So obviously we're breaking above on the monthly, a lot of these parallel channels that we're putting in. This one is the S&P. It's shooting straight above it and probably going to close above this key level of support and the parallel channel. Is that necessarily something that means that we're in a bull market? No, by no means whatsoever it does, but it does mean that there is a potential move where it finds some support on top of that parallel channel for a period of time, especially if we go into the lower time frames, right? But again, we're looking at this move and the S&P from where it bottomed to where it is currently. It's up 28%. That's a pretty good move. But see what the move was down from the top to the bottom of that move. That was 27%. So they're not equal to each other. There's more money up here down there, so that's why it came down, and 28% increase from where it currently is. I'm trying to explain math to people in case that didn't add up. But yeah, so S&P, obviously it's climbing up, but the monthly stochastic RSI, it's going to be pretty overbought in about 44 minutes. So follow us on Twitter. I'll post some pictures of that so you guys can keep an eye on how the monthly close is for a lot of these indices. The NASDAQ, same old song and dance. It's shooting straight up. We found some rejection at this top level and we're closing a little bit under. So there is some resistance somewhere around here. But there was also resistance here and we broke through it, right? This parallel channel, we broke above it, but we're completely overbought. We're actually overbought right now and more overbought than the other two indices on the monthly, which isn't necessarily a bullish sign. And again, we're putting in a lower high, which means that there's a good chance that we could put in another lower high and another lower low. And this would be anticipating, if we're looking on the macro, higher highs and higher lows is a bearish setup in my opinion. But when we see lower lows and lower highs, that tells me that there is going to be a bullish continuation, but we need to see the bear market play out. So we could be putting in these lower highs and lower lows all the way down, and that finds us at the bear market bottom, and that sets us up perfectly in a parallel channel, something similar to like this. Right. So say that, we're just trading this range for a period of time. And then when we get to whatever the bottom of the market is, that allows us to break out, and that signifies what a bull market would be. So keep an eye on that. We have to think also macro bullish. So this is just, if we're looking at this on the monthly, this is a very fresh structure. We only have, maybe 2 years worth of data here. This plays out over time. And again, you can see this throughout the history of NASDAQ, Dow, S&P. You can find these bullish flags in macro structures that explain why we finally see the catalyst for a bull run on the technical side. So NASDAQ, I think that hopefully we find some rejection here and we come to maybe this lower trend line, find some support before we continue up. But this to me seems like we're hitting resistance along with the stochastic RSI being extremely overbought. And again, I think there's a lot of shorts out there, and at some point there is not going to be, it's not going to be as profitable going long if all the longs are building liquidity below that area. And we've probably opened up so much liquidity from this level down here at 10,460 all the way up to even where we are currently at 1519 or 15,197. So keep an eye on that. Dow broke above the key resistance, but again, to lower high. Still see this. I think that we're going to be overbought on the stochastic RSI very soon. So nothing too crazy there. This could be a fake out too. That's another thing you have to keep in mind. Maybe this does continue. Maybe this is a fake out. I don't necessarily trust, support and resistance when it comes to some of these TradFi things, because again, there's a lot more money pulled into this than there is in crypto. And, anything based on the news could definitely shoot the indices up or down, 2-3% in either way. And that could break above, structures and stuff like that. So we have to think macro here. And one thing is that it's going to be overbought, right? And it's very similar to the NASDAQ. I think that we didn't see extreme growth in the past few months. We've seen, we've kept on finding resistance. This has been more resistance than it has been, growth in my opinion. So it's been trading in a sideways range, not necessarily a great pattern to be trading in. It's a continuation pattern. And again, the trend was down from here. So maybe this is allowing us to go down, but who knows, something crazy could happen and we could see, all-time highs for the Dow. So, just one of those things you got to keep an eye on, but don't, FOMO into stuff or fear anything's going down instantly just because we're breaking above or below support and resistance in TradFi. So that's for the major indices. I think one thing that we do need to keep an eye on too is Bitcoin. Obviously, we are trading pretty high today. We're at 30,400. It went higher last night. I believe that we hit last night. Let me pull up the daily, go in the shorter time frames.
We hit 31, I think.
Did we hit 31 on the dot again?
I don't know about on the dot, but
31,282. So
yeah.
It's not a new high, but it's getting close to it. But again, we're in this parallel channel. We broke above this, but we didn't close within the daily in it. Obviously we are where we are right now, and we're 4 hours and 30 minutes away from the daily close. So we're going to close within this channel most likely. And again, that goes for the monthly as well. I think that we need to see lower price. We're probably going to test this lower end of this. Actually, but here's the thing though. Did we actually go down there? Yeah, we did. We hit 29.5. Okay, so I think that we are going to probably come down on the daily, maybe a little bit. Maybe today is, brings us down. We hit 29.5, which was kind of a level 29.5, 29.4, where I thought we were going to actually tap into. And it looks like we hit it yesterday. It must have been like a quick wick down. Obviously, we see the spinning.
Yeah, we took a quick wick down there this morning. That was when the news came out
ETF
around the ETF. Yeah.
Gotcha. So that totally makes sense. Okay. So then I'm honestly anticipating us to be going to 35K, 34, 5, 35K, in my opinion, for this. Maybe, we consolidate on the daily, but we're in this bullish flag right here, lower highs and lower lows. And I'm talking about closes, not necessarily the wicks right here. I do think that we'll probably break out of this to the upside. No guarantees in that, but I do think that CME gap that we've been talking about, that futures that's been traded, I think that's probably a good level of liquidity that they're going to want to tap. And again, with that being said, if we see something similar to like these green candles here, we're just stacking, these gaps on top of each other. And these are pockets of liquidity that are absolutely going to be taken out. And do they have to be taken out? No, but there's just so many of them that it would be idiotic for them not to try and make as much money possible on the way down. There is another gap on the CME. It's down, I think, somewhere around like 20,000 or something like that. So that could be, lining up with, the macro and Bitcoin. Obviously, the monthly is going to be overbought in a few hours. Yeah, we've shot up very considerably. We're in the supply zone, this local top. This is where a lot of whales have been distributing. I wouldn't be surprised if we close within this, but we do get a wick to 35K at some point. But then at the end, we just get massive rejection. And again, we're talking like $4,000 difference here. We see how fast Bitcoin can move when it wants to and how much it wants to drain when it does. And I think a lot of money that did pull in from retail was based on how bullish everything seemed. Bullish news isn't necessarily bullish for price action. It could be in the long term, but for the short term, I think that we definitely saw a bit of, retail FOMOing in, expecting this ETF to be like super bullish for Bitcoin price. But again, this may be just news to get people pulled into the market. So with this monthly close and the weekly close and Q3, I think that we're closing in a supply zone is very evidence of what's going on. I don't necessarily think anything is bullish by any means. We see the price pushing up as volumes have dropped over the past 3 months. It's not a good indication of price discovery. It's more of okay, this is the end of the move. We're seeing some exhaustion. Maybe we have a little bit more to the upside, but for the most part, we are kind of stuck in this range where I think we're just going to start distributing, get rid of anything that we have that we didn't get a chance to sell earlier. And we did push the price up considerably from, the August, what was it? Shot up to like 24, 25, 24,000 or something like that back in 2022. And then obviously we're down at FTX down here. So if you're swing trading, or even if you had like Bitcoin that you bought back here expecting the market to bounce back and it didn't, you're in a place where you can sell for higher now. So I think that's what we're seeing a lot of too. So closing the supply zone is really important. I think that gives the game away a little bit, but again, I could be wrong. This could play out another 2-3 months. It could take, I don't know, 6 months. We just have to keep an eye on that. And then Bitcoin dominance is being so extremely high. It's at 51.24. It's down about 1.5% today. It's the first time we've seen a little bit of a pullback in Bitcoin dominance as of recent. Just keep an eye on this. I don't necessarily think it's over. I think that I'm not going to say this, but it's kind of over for alts. Ethereum pushing up today, though, I will say is bullish for Ethereum. Not that price action, but it just means that, it took over a little bit more of the dominance from Bitcoin, but that could easily be reversed in one foul sweep. Bitcoin still has 51.24% of the entire total market cap for crypto. And if we look at the total market cap of crypto, what we're doing right now, we are getting on the monthly closer to overbought. We're at right now 55 and 44. I expect this to be going a lot higher than that, but on the monthly, I can't really see what we're doing, but we are putting in what looks like a bull flag on the total market cap. Yes, this is a total crap market. The total market cap. I need some water. But yeah, here the right shoulder, we see the left shoulder, head, and here's the right shoulder. I do think this is, setting us up for another move to the upside for the total market cap. That could be Bitcoin shooting up to 35K, right? That could push the price up, because if we look at that compared with where we are on the weekly, there is a little bit more room on the weekly. But I do think that we are going to find ourselves in a place where, the daily is going to bring us down a bit. Is it the monthly? I think it's monthly. Monthly being overbought. I think everything's lining up for, Bitcoin maybe to be pushing up, which would bring dominance up. It would allow for alts to sell off, and in turn, hopefully bring USDT back above that 7.3 level, which we've been keeping an eye on. And on the monthly, we have plenty of room for USDT to be increasing, which means people are moving their money into stables as opposed to risk assets. And that would be the a sign that, okay, we're not necessarily in a bull market. We're not really sure where we are, but let's de-risk and just sit and assess and see how this plays out. So that's what I'm seeing for the monthly close. A lot of stuff to be keeping an eye on. But again, we have to think macro, because I'm praying for a total market crap. Yes, I agree. Total market crap of, I don't know, let's bring the total market crap down to at least 740 billion. Let's do that. That seems like a good one. That's a start. 740 billion pound crap.
Crap right there.
Exactly. So that's all I got. Keep an eye on everything, as you would, right? Yes, it's the monthly close, it's the quarterly close, it's the daily close, it's the weekly close. Everything's closed. It's Sunday and Chick-fil-A is not open. But there's a lot of stuff to keep an eye on. But big picture is the most important thing. Don't get caught up on these smaller time frames, because that's how you get fucked.
All right. You heard it here first, folks. That is going to wrap it up for today's show. Thank you, everybody, for watching. Randy, appreciate you as always. Steve, thanks for watching, buddy. Appreciate you subscribing to the show, too. We'll be back on Monday. It's a shortened day in the markets. Markets close at 1 p.m. Eastern on Monday. So a little, we'll be here to kind of digest everything. Will it be eventful? Who the hell knows? But we'll be getting ready for July 4th, when the markets are definitely going to be closed. We will not have a show that day, but we'll be back on Monday. Appreciate you guys. Have a great weekend. If you have not yet, hit that like button down below. Subscribe to our channel. Drop a comment on the video. Share us out on social media. All of that stuff helps a ton as we try to grow this channel. So thank you, everybody, for watching. Have an awesome weekend. We'll see you next time.
Love you guys. Have a good weekend.